put together some numbers and some data here. But thing number five, Gary, Nike, ticker NKE stock tanks. Don't let the valuation fool you. And I think actually with Learn Wall Street, in our version of the five things, they talk about buying a company based off of past glory. You're going to talk a little bit about that.
Yeah. So, Rob, this is something, one of the things that I think is really important is investor education. Everybody, finances matter to almost everybody. Finances certainly matter to everybody who's listening to this show right now, and everybody who will, see the clips of this that Andrew puts up on X, on Twitter. Um, and so what we want to do is help people learn and understand better. And one person who's done incredible work in this area is my old partner from Silver Arrow, Raij Khabbaz. He started a company called Learn Wall Street, which is dedicated to helping novice investors and young people in particular learn about investing. And so, I don't have anything against Nike right now. There are some smart people, including Bill Ackman, who think they've called the bottom and they're buying it. And I have no bone to pick with their analysis on it. But, Raji's point on Nike is that you really need to look at a company's history. And that stock this year is down 24% to date and has really gone nowhere. It's gone down for the last 3 years. And, it would have been really easy at any point to say, well, the company is undervalued because the stock is down. And that's rough analysis. The reason the stock was down was because of relatively small declines in revenue. Revenue growth is really, really important. And, one of the things we talked about earlier in the show is how, NVIDIA has had 100% or so revenue growth rates. And, Raji points out that on June 28th, 2023, Nike stock was down 20% in one day. And the reason for it was because they had projected a 5% sales decline. And so these things are really important. Companies that miss, companies that have slowing growth rates or negative growth rates, declining revenue, these things can persist for a long time. And when that happens, you can run the risk of saying, hey, the stock's a bargain because it's down. And Raji's point is no, it's not. It's down because the sales are declining. And that's the key analysis. Now, I haven't actually read, Bill Ackman's analysis on this. I suspect, he's not so much making a valuation play. I suspect he thinks the revenue growth will turn around. Again, if somebody has read his work on this, feel free to let me know. But that's a different bet. It's very different. If you're saying sales have been down, that's caused the stock to decline, but here's why I think sales are going to improve, then you have an investment thesis. You can invest in that. If it's just, well, the stock is down, so its proper value was its high point from where it was before, that's dangerous. And that's the point that Learn Wall Street is making. And that's a great lesson for all investors and to encapsulate it sort of in one sentence for people who are looking at this and looking at investing. If the stock is down off the highs, figure out the reason, right?
Yeah, it's one of those. Or sorry, go ahead, Gary.
No. That's the key thing. The
Yeah,
market is wrong at times, but figure out the reason. Make sure you know what it is. And if that reason is declining sales, you better be quite certain that those sales aren't going to continue to decline.
yeah, definitely a situation here. Nike having a great brand for sure, but the stock no longer being a growth play. Question I wanted to ask Gary is, when choosing stocks, obviously a lot goes into the evaluation. What's another item out there for maybe beginner investors, intermediate, even in terms of something that you pay close attention to when picking stocks?
I think there's value in looking at the management team of these companies. A lot of credit to the DKI interns. Again, Andrew and Alex do phenomenal work, but they made a point of pointing out for this week's written version of the five things that Starbucks recently hired the CEO from Chipotle. And the reason for that is during his tenure at Chipotle, he more than doubled revenue growth. He grew the stock price more than 700%, and he dealt with the company's food safety issues. And so, the feeling was, hey, wait a minute, we've got a guy here who's proven himself. And, frequently you'll see anybody can have a hiccup, anyone can have a misstep, but frequently you'll see, people who are good tend to be good, and people who aren't so good tend to be not so good. And so I think there's value in taking a look at that. One of the things that we relied on, another one of our portfolio positions is authID, ticker AUID. They are, a micro cap public company in the biometric security space. But one of the things we looked at was the new CEO there, Ron DeGuro, had taken revenue at SoCure from a few million to over 100 million, signing, I think, more than 1,000 customers. So when you see a guy do that and he says, okay, I'm going to come into authID, and here's my sales process, and here's how we're going to build the pipeline, and I already know all these people in the technology and security space to reach out to, I think that's credible. And that's the kind of thing that we look at as, is that the whole story? No, but it should definitely be the kind of thing that you look at. Are these people executing? Do they have a history of executing, or a history that, maybe indicates they're not so terrific?
Great stuff, Gary. Once again, this is the AI chip issue, like we talked about at the top of the hour. Remember, please like, subscribe, follow us, a variety of different social media channels. Gary, you're becoming more and more micro famous
Right.
every single day. So, but YouTube, great place for obviously a video version of the 5 things. Subscribe to our free newsletter on the website, deepknowledgeinvesting.com. Be sure to follow Gary on X, Instagram. Maybe we'll eventually get him on TikTok. Not quite yet, but we're
Unlikely.
getting there. And thank you so much for all of your support. I know I have a great time hosting this show with you, Gary. Gary, any final closing thoughts?
Well, thanks, Rob. I know you've been traveling around. Always great having this hour with you. The other people I want to thank, first of all, to the people watching this, thank you. We know your time is valuable. We appreciate you spending it with us. We've had some really nice subscriber growth lately, and round of applause to the DKI interns, Andrew and Alex. Their contributions to this work are absolutely phenomenal. Their work and their efforts are directly related to the growth that this channel's had, to producing fantastic content that we're putting on X and on LinkedIn on a daily basis. It is remarkable work for a couple of college students who really understand investing, finance, economics, marketing. Guys, I'm really proud of you, and thrilled to see the way you've developed and the great work you've done. And that's everything. Rob, any final words from you this time?
I don't think so. I'm thinking we got to keep no more weeks off. I think there's something to it. I think the 5 things is just moving the needle and keeping the pulse on the market for everybody out there.
All right. Thanks, Rob. Everyone, we'll see you next week.
Thanks so much.